Good afternoon, students. Good afternoon, Ananda. Can you please mute your mic? Good afternoon, everyone. Can you hear me? And are you able to see the slides I'm sharing?
Yes, ma'am.
Okay, perfect. We're just waiting for the others to join and then we'll commence at 12. Okay, thank you. Ananda, can you please mute your mic? Good afternoon, Anande. Could you please unmute your mic or mute your mic, please? Good afternoon, students. Thank you for joining. We're just going to wait another 2 more minutes and then we will commence at 12. Thank you for those that have joined early already. Thank you. Good afternoon, everyone. We will commence now because our time is limited. Because I know many of you still have to attend lectures this afternoon. Please, if you could just bear with me. I do have a bit of a throat infection. So if there is something that you are not able to hear, then please just raise your hand or just post a message and I will repeat myself. Thank you. Welcome, everybody. Please have your pens and paper ready to take some notes. I hope you have your textbook and workbook with you, your calculators, and that you are ready to commence with our revision session for Learning Unit 1 and 2. Everybody able to hear me and see the slides that I'm sharing? Could I have a reaction, a thumbs up, please? Thank you. Thank you. Some important reminders for test one. I would like to just remind you once again, and I'm sure your lecturers in class have also gone through this with you, that test one will contribute 25% towards your CAS. Very important for you going forward now into your test on Monday is to read the instructions carefully on your test question paper. Also, please do answer all the questions in your answer book. Round off to the nearest rand or to two decimals as instructed on the question paper when required to for calculations, and show all your workings on your answer sheet. Write in blue or black pen on your answer sheets, and also please just breathe in and remain calm at all times while completing your test on coming Monday. Any questions there? And then just again, some reminders, especially for our late registration students, we do have additional resources that could assist you. We have a YouTube link with some catch-up resources of our recording sessions that we had. And also, very importantly, is our learning management system, ARC, where your lecturers have uploaded ICE tasks that you were supposed to complete to prepare you for your upcoming test for Learning Unit 1 and 2. And our wonderful friend Finn, our bot, who's also available there for you. If you still need some additional support, please scan this QR code, but I'm sure your lecturer has also made this available for you on ARC. And lastly, the summary sheet. This was also shared across all campuses. This is your go-to. Okay, please keep it handy with you while you are studying now and preparing for your upcoming test. So let's get started to revise for Learning Unit 1. Learning Unit 1, an introduction to business bookkeeping and accounting. Let's look at what are learning objectives for Learning Unit 1. Briefly describing the history of accounting, outlining the uses of accounting information, explaining the different qualitative characteristics, illustrating the accounting cycle, contrasting the differences between financial and management accounting, and listing the various types of transactions that occur during the course of a business. Again, please be reminded that your assessments, okay, are test or you are assessed according to these learning objectives. And again, remember that these learning objectives appear on ARC and also in your module outline. So for Learning Unit 1, I would say we need to focus on different types of theory questions. Very important learning unit this, because this is where you actually got your understanding about accounting, the importance of the double entry rule, who is Luca Pacioli being the father of accounting, and so many more important content is covered in this learning unit. But more importantly is that you will be assessed on some short theory questions. So please look at being able to answer true and false questions, choosing the correct answer, filling in the missing word, and also revise those questions in your textbooks. Question 1.2, 1.4, and 1.5, and also the multiple choice question that you had to complete as an ICE task for on ARC, and also the past test papers that your lecturer has uploaded for you on ARC will also give you a good overview of the different types of multiple choice questions you could be assessed on for Learning Unit 1. And then we also have some longer theory type questions that you need to prepare yourself for. We have, for example, again, based on your learning objectives, name and explain the four uses of accounting, list the various types of accounting transactions, tabulate the difference between financial accounting and management accounting, and then again, also please do revise the ISTARS questions on ARC that your lecturer has uploaded, and also your past test papers. Also revise those. Are you all still with me? Any questions? If you are happy, can I have a thumbs up? Perfect. Thank you. Our focus is more on learning unit 2 because we're limited for time. So I really want to focus on this learning unit, because here you're going to have not only theoretical questions but also lots of practical application. So my time here this afternoon with you is to spend on the practical applications. Okay, questions in learning unit 2. Very importantly, as I just mentioned earlier, there will be theory questions, so please do study your formal IFRS definitions for income, expenses, assets, liabilities. I'm sure that by now you are familiar with these important concepts and that you have an understanding of the impact of these definitions on your accounting equation. Everybody, before I continue, are you still able to hear me clearly? Perfect. Thank you so much. Thank you. Our chart of accounts, very, very important, especially for your accounting equation. You have to study the chart of accounts on page 52 in your textbooks. Please, Shamiso, can you please mute your mic? We're getting some disturbance on your side. Thank you. Okay. Sorry, let's just get back here again. Chart of accounts on page 52. Okay, you'll see there our different classifications, what are assets, our non-current assets, our current assets. Please, you need to study this again also for short questions and also more importantly for analyzing transactions on the accounting equation. Okay, so this is very, very important for you to study and prepare for test one. Then on page 46 and 51, more importantly, our debt click rule, especially if you are going to be assessed with having to do any T accounts, then you have to apply the debt click rule. Then some very important concepts that I want you to study and to remember with regard to calculating gross profit and net profit. So before we actually calculate our profits, we need to first calculate our net sales. And how do we calculate our net sales? That will be your sales minus your sales returns. And how do we then calculate gross profit? That will be the net sales that you've calculated using this formula minus your cost of sales. Then there are two methods in which you could calculate net profit. I'm sure that you have been practicing this in your revision questions at the back of your textbook. Okay, and also when you actually did question 2.4 in your textbook in class, you were asked to calculate owner's equity, and also in question 2.9 specifically there you were also having to calculate whether the business made a profit or a loss. So very importantly to remember that there are two formulas in which you could use to get to the same answer of net profit. You can take your total incomes minus your total expenses, or you can take your gross profit that you calculated here using this formula plus your other incomes minus your expenses. Okay, so please do remember this. And then, of course, what is owner's equity, or how do we calculate owner's equity? There is also two methods, and this is also given in your textbooks in Learning Unit 2. There are two methods in which we could calculate owner's equity. Okay. Right, so how do we calculate owner's equity? It's your capital plus your profits minus the drawings, or we could have total assets minus total liabilities. That will then give you owner's equity. Everybody, you still with me there on how to calculate owner's equity? Those are the two methods. Right. Then, when having to calculate assets, we also have two methods, either owner's equity plus liabilities, or the expanded accounting equation, which is capital minus drawings plus income minus expenses plus liabilities. Okay, so please do remember to study this and to take it into consideration, all depending on what is being asked in the question. That will guide you as to which formula you need to use. Okay. Okay, now we're going to start with our um, activity. Are you still all able to see the slide I'm sharing? Perfect. Okay, here we have a question where we are required to calculate the total assets, showing all workings, calculating the total liabilities, showing all workings, calculating gross profit, showing all workings, calculating owner's equity. Okay, so we must show the formula and also the workings. Again, with a question like this, what is important for you as a student to know? You need to know your chart of accounts. You need to know what are asset accounts, what are liabilities, what are gross, and how to calculate gross profit. Again, the formula I shared earlier, and then how to calculate owner's equity. Also, being able to decide now which formula to use. Okay. Right. So I'm hoping that we'll be able to do this together. I'll give you a few minutes to identify how we're going to calculate total assets. Okay. I think you are ready and you know what are your assets. They are your non-current and your current assets. And have you identified for me what are your non-current assets? Have you got your answers? Can I have a thumbs up? Okay. Right. Okay, so let's have a look. Well done. Well done. So let's see what you have. If your answer and mine will be the same. So there we go. Are you happy with this answer? Equipment, trading inventory, and debtors. So that is your total of your assets, your non-current plus current assets. Also very important to read the instructions of the question in your test. Sometimes they could only ask you to calculate non-current assets or current assets, and then that is the only one that you have to then provide, and not the total. Okay, so please just be careful that when you are reading your questions, this one specifically said total assets, so yeah, I had to combine non-current and current. But if they say only provide non-current, then you'll only give equipment 10,000. And if they say provide the current assets, then you'll only give trading inventory and debtors. Are you with me, everyone? Do you all understand? So there's different ways in which we could ask you to answer this specific question. Sorry, the next one was the liabilities, and I hope you got to this answer. Everybody happy there? Did you also get, again, because it said total liabilities, I had to take mortgage loan, and mortgage loan is a non-current liability, and creditors is a current liability. And if I add up the two amounts, that will give me my total liabilities. Again, as I mentioned before, this could also be phrased in another way in which they could ask you only to give the the total of the non-current liabilities, and then your only answer would be the mortgage loan, or if they only wanted current liabilities, you would then only give the 10,000, as creditors is the only current liability. Everyone understand that? Perfect. Okay, then the next question was that we had to calculate whether the business made what was the gross profit? What was the gross profit? If I could just quickly go back to the slide there, calculate gross profit. Calculate gross profit. Okay, and in the previous slide, okay, that I shared, I'll just go back so you can quickly do your calculations. What did I say? In order to get to the gross profit, I need to take my net sales minus my cost of sales. But how am I going to get to my net sales? It's my sales minus the sales returns. Okay, so everybody happy with that? So we'll go back now. I'll go back again to this slide and I'll give you a few minutes to see if you could get to that answer before I share my answer. Uh, Natumbizini, can you please mute your mic? Thank you, thank you. Are you all ready? Can I share my answers?
No, can you please have 2 minutes?
Okay, thank you. Not a problem. We'll wait for you. Do you want me to share the slide with the formula so you can know how to?
No, thank you. I screen grabbed it.
Perfect. Thanks. Perfect. Okay, I think you are all ready. So let's see what answer you have there for me. Okay, firstly, again, what did we say? We have to calculate our net sales, and that will be your sales minus your sales returns. Did you get that answer? And if you take your net sales minus your cost of sales, that will give you your gross profit. Well done, everybody. Well done. Okay. Right. Well done, everybody. Okay, so we'll continue with the next question. And this one, I'll just go back again to the slide. Calculate owner's equity, and they want us to show the formula. Now, when given a question like this in your test, or please take note to read again what is given to you. Okay, so here, what do you see is given to you here? Can you see right at the bottom, they've already given us the net profit. So what do you think? Which formula must we use if the net profit was already provided to us? I'm going to share this again. Which formula do you think we need to use now to calculate the owner's equity? Have you identified the formula that we need to use? Okay, remember, it's between this two. owner's equity equals capital plus profit minus drawings, or owner's equity equals total assets minus total liabilities. Okay, and if I go back here again, right, the formula we're going to be using is, because they've given us the net profit here, we are going to be using this formula. Okay, and it's very important that you write down the formula, because marks could be also allocated for you actually providing the formula that you are using. Okay, so we're going to take the capital, we're going to add the profit that was given to us in the activity, and we're going to minus drawings. And remember, all these amounts were given to us in the activity. We were given the capital balance, we were given the drawings, and we were given the net profit. Everybody happy with that? So there we now calculated the owner's equity. Okay. So very important to note that there are different ways or methods in which this question could be asked. I've just also want you to take note of the following, okay, that I'm going to share with you now. It was not part of this activity here, but in the event that you will be asked to calculate net profit, again, there are two methods in which you can calculate net profit, and you'll still get to the same answer. But again, what do you need to know? You need to know, according to the chart of accounts, what are incomes and what are expenses. Are you with me, everyone? So you see how important it is for you to study your chart of accounts? Okay, so we will look at the first one. You can either say total income minus total expenses, or you can say gross profit plus other incomes minus your other expenses. Now you remember in the previous slide, we already calculated the gross profit. Okay, right. So all we had to do was to take that answer now and move it down to here. Can you see? Right. So we had the gross profit. Now we add our other incomes. And what is the other income? Rent. We know rent is an income. What are expenses? According to the chart of accounts, salaries and wages is an expense. Advertising is an expense. And telephone. Okay, so I minus the expenses, so I've added, again, in this example, only has one income, rent income. But please remember, according to the chart of accounts, there are many other examples of income accounts. So you have to study that. Okay, many other examples. Okay, commission received, credit losses recovered, interest received. You still remember those? And also for expenses. These are just but a few examples that I've included here. But there are many other examples. Okay. And then the second method. Okay, so here I've used this method. And now I'm going to use this method. Okay, so when I use this method, I'm now going to look at what are all the incomes and what are all the expenses. So now I have to start from the top. Okay, with the first with this calculation over here, I already used the sales and the cost of sales to get my gross profit. Can you see that? But now if I want to use the first method or first example, I will have to start with sales because sales is an income according to the chart of accounts. Okay, so now it will be sales and rent income. They will be my incomes. Are you with me, everybody? And then I will subtract all my expenses. Right. And what are my expenses? And now it will be everything. The sales returns, the cost of sales, and also the salaries, the advertising, and telephone. And what do you see over here? I got to the same answer. Can you all see that? Whichever method I used, I got to the same net profit. Everybody happy with that? Any questions? Do you understand? You just need to study these formulas or just remember them. Okay. Um, yes, Kabetsu, I see you raised a question. Can you maybe post your question in the chat? Or if you want to, can we continue? I saw someone raised a hand. I just want to know. Okay,
Ma'am,
perfect.
Can
Oh,
you please
yes,
go to
yes.
question? Can you please go back to question 4.3 quickly?
4
The
point.
answers.
Here we go.
Thank you. Thank you so much.
Perfect. You're welcome. Please also just a reminder that this session is being recorded and we will share the link. Okay. It will be on a YouTube link and it will be shared across all the campuses with your lecturers. Okay. Okay. So let's continue now to our next. Again, just a reminder that in your textbook there is similar questions like this. Practice question 2.4 and your revision questions at the back of your textbooks. I have highlighted the pages, so please do go and have a look at these questions in the back of your textbooks and do revise and work through them over the weekend before you are going to be writing your test on Monday. Okay. Now we're moving on to the accounting equation. And I know, yes, many of you um, tend to find it very difficult with this question when you have to identify which accounts to debit or credit. Okay, again, if possible, if you can just follow these steps, okay, it will help you to simplify it, make it easier for you to answer the question in the test. Okay, so very important when you are told to analyze transactions, and again, remember a business have various different types of transactions. You were introduced to all those different transactions in Learning Unit 1, and then what happened in Learning Unit 2? All we did was we just added amounts to them, okay, right? And we just related it to a specific business scenario, and more specifically for us in semester 1, our focus will be on a sole trader. Okay. So you read the transaction without understanding. So you have to be able to understand what is this transaction to the business? Okay, that is step number one. Then step number two, identify a minimum of two accounts. Two or more accounts should be identified from each transaction. So we're going to be working through this step by step now. So clearly in each transaction, there are keywords that will help you to identify the two accounts. And we all know what is the double entry. Am I right? You all know what is the double entry? For every debit transaction in the books of the business, there has to be a corresponding credit transaction. Okay, right. And then our next step is now to classify each account. Again, your chart of accounts will help you here, right? So while you're practicing over the weekend, you can use your chart of accounts. But remember now, in the test on Monday, you will have to know this off by heart. You will have to know what are the different types of asset accounts. Again, non-current, current, what impacts owner's equity, the two propriety accounts, capital, and drawings. Capital increases owner's equity, drawings decreases owner's equity. What does income and expenses do to owner's equity? Income increases owner's equity, drawings decreases owner's equity. And again, the liabilities, okay, your non-current and your current liabilities. Okay, and we know again for assets, what happens with assets? They increase on the debit side or the left-hand side and decrease on the credit side or the right-hand side. And it's the opposite for liabilities. What happens with liabilities? They increase on the credit side or right hand side or and then decreases on the left hand side or debit side. Okay. And then you have to establish how each of the accounts either increase or decrease. Um, uh, Gayla, could you please mute your mic? Sorry, you
Okay, thank you.
please mute your mic. Thank you, thank you. Right, and then most importantly, always check that your equation is in equilibrium. Okay, that the left-hand side equals the right-hand side. Okay, everybody happy with that? Perfect. Okay, so let's look at our first question that we have here. Now we're going to be practicing. But this is very important. And this is in your summary sheet that I've made available to you. Okay, your summary sheet. Okay, so there, can you see assets? We debit them and they increase on the debit side. We credit it when it decreases. Owner's equity, what impacts owner's equity? Capital increases owner's equity on the credit side and income. Okay, what decreases owner's equity? Drawings and expenses. Right, and liabilities, they increase when you credit them and decrease when you debit. Any questions there, guys? Please, you have to. When you going to write your or answer this question on Monday, then please do write these rules at the top of your answer sheet so that when you are answering it, that it guides you and supports you as to choose the correct plus and minuses or debits and credits. Okay. So let's practice now. I will also give you some time here to just have a look. The first transaction is an example activity. Okay, and always remember that we will tell you how we want you to answer the question. So there will always be an example. Okay, so for example, here we paid wages 500 Rand cash. Can you see? Okay, do you all understand the transaction? The owner of the business had to pay the wages, okay, to one of his employees, and he paid it out for cash. Okay, so we read the transaction. We need to understand it. Step number 2, identify the two accounts as wages. The minute you see cash, what does cash tell you? Cash. Either cash or they like to use EFT. So when they use cash and EFT, then please, you must remember that this account is affected, or the account that is affected is bank. Are you all happy with that? Can I have a thumbs up? It's bank, bank. Cash, EFT, it's bank, bank. Okay, all right. So those are our two accounts, wages and bank. Okay, right. So you write down your amounts there because you know wages is an expense, and from your notes over here, we know expenses affects owner's equity, so you're going to write down your 500 and you're going to put, and you know bank is an asset, so you're going to put it under assets. Now you need to determine the impact. Are they minuses? What are you going to debit? What are you going to credit? Clearly, because you know wages is an expense, and where is it? It's on the debit side here. So that helps you to know that that is the account that you must debit. And also it tells you that wages, which is an expense, decreases owner's equity. That is why it's a minus. Okay, right? Okay, right. And then next, we look at our assets. What is the impact of our assets? Clearly, we know the double entry rule. Do we debit and debit? Do we say debit wages, debit bank? No, the other account must always be credited. Everybody happy with that? We always debit one account and we credit another account. Okay, so therefore the other account, which is known as your contra account, must be credited. Okay, so bank will be the account that is credited, and if you look at the rules, if you credit an asset, it's also a minus. Everybody happy with that? Can you see how this can help you to know when to debit, when to credit, and whether it's a minus or a plus? Okay, all right. Let's look at our next example. Okay, or the transactions that we're going to be doing now. There are 4 transactions we will be revising. Firstly, James invested 50,000 cash into the business. That will be the first transaction. Then the next one, the business bought merchandise worth 8,000 less 5% discount, and this was bought for cash. Okay, and then we sold goods for cash, 2,000 Rand, and there was a profit on the sale of 600 Rand. Okay, right? And then bank charges of 250 appeared on the bank statement. So these are the 4 transactions we're going to analyze. Again, because of time constraints, I cannot go through all the possible transactions. You have to revise all the other transactions. Okay, referring to the activities that you've done in your textbook. Okay, right. So let's look at the next transaction. Everybody happy? Can I continue? Any questions? Perfect. Thank you. Right, so let's look at James invested 50,000 cash into the business. The minute you see the word and the name of the owner and they said he invested money, then you must know that account's name is capital. We know capital is what the owner contributes to the business. Okay, it could either be in the form of cash or any other resource that he contributes to the business. And again, what did we say? The minute you see the word cash, what is that account's name?
Bank.
Bank, yes, thank you. Okay, so there we know we have capital and bank. Again, now you're following your steps. What does capital do? We know it impacts owners' equity. Okay, right? It's a propriety account. And bank is an asset. So we know we need to put the amount under assets and owners' equity. Nothing of liabilities. Okay, all right. And then again, if we go back here to our um, little cheat sheet, okay, what does it say? Capital must be credited, okay, and it must be a plus, okay, right? And because I'm crediting capital, must I credit the bank also? No. Always remember there has to be a contra, and the contra means the other account must be a debit. There's always a debit and a credit. Debit and a credit. Okay, so now I have to debit my bank account. Okay, now I'm going to debit my bank account because clearly this money that the owner has contributed to the business is increasing the value of the bank account. So that is why it's a plus. Everybody happy with that? So they are both pluses. The one is a debit and the other one is a credit. Debit the bank, credit capital. I only have one thumbs up. I'm a bit worried over here, guys. Is it only one person that understands this? Anybody else? Okay, thank you. Thank you. Okay, let's look at our next transaction. Here we bought merchandise worth 8,000 Rand, but because we might have purchased it for cash, now we're getting a discount of 5%. So how are we going to calculate this? Firstly, don't forget to show your workings. So you're going to say 8,000 multiplied by the 5%. So that is 400 Rand. And then we minus that 400. And then that is our new total. Okay, 7,600. Everybody happy? Are you able to calculate discount? Right. And now again, what did you buy? You bought merchandise. And again, it says cash. Okay? Cash. And we know cash, I'm sure everyone knows, the minute you see cash, it's bank. Bank. Merchandise goes as trading inventory. Okay, right. And they are both assets, both assets. Okay, so no impact on owner's equity, no impact on liabilities. Okay, so again, we're going to debit trading inventory, credit the bank. And always remember your left-hand side must equal your right-hand side. Okay, plus 7,600 minus 7,600 will also equal 0. So your left-hand side equal your right-hand side. Always remember that last step. If the equation is not in balance, if it's not in equilibrium, if the left-hand side does not equal the right-hand side, then somewhere you did not do or record your impact correctly, your pluses or your minuses, or you've put the amounts into the wrong section. Okay, on the accounting equation. Okay, can we move on to the next one? Right? Now we have sold goods for cash. Sold goods for cash, 2,000 Rand, and there was a profit on sale of 600 Rand. Okay, so here, what have they given us? They've given us the selling price and they've given us the profit. What don't we have? What don't we have? Have they given us the cost price? Have they given us the cost price?
No.
No, we need to calculate it. Okay, and how are we going to calculate it? You'll see over here. I took the selling price and I minused it from the profit, and that then gave me my cost of sales. Okay, so just remember again to show your calculations. But for this entry, whenever you are given this entry, remember there are two double entries because this business is using the perpetual inventory system. We know that if they were using the periodic inventory system, there will only be one double entry, which will be the first one. Okay, because with the periodic inventory system, we know that cost of sales is not calculated at the point of sale and is only calculated at the end of the financial year when a stock take has to happen. But with a perpetual inventory system, the value of the cost of sales will be calculated at the point of sale, and with the perpetual inventory system, there will be two double entries. So the first double entry
Ja,
that we're going to do is to record the income. How much are we receiving? How much is the business receiving? Okay, so again, you have to identify the word cash again tells you that it's bank, okay, and you're selling goods. So the minute you see sold goods, that should already ring a bell that this is sales. Are you with me, everyone? Sold goods will be sales and cash will be bank. And then once you identified the two accounts, you will then know where to put them. Bank we know is an asset, and we know that sales is an income, and income increases owners' equity. Okay, so can you see how important is your chart of accounts on page 52? You need to really memorize that. Okay. Then again, if I go back to this, okay, we know it's an income, so incomes must be credited, okay, and then we will debit the other account, which will be bank. Okay, right, so there we're debiting the bank and we're crediting sales, and they're both plus plus. And now, in the books of the business, remember the customer came into the business. We understand that they bought goods and they've left now. We sold the goods. So, in the books of the business, the bookkeeper needs to show that the, the stock has left, but in the books of the business, we need to record it at the cost price. Okay, so this is why the account that we need to take into account here is cost of sales. Cost of sales. We're going to debit cost of sales, and what do we know of cost of sales? It is an expense to the business. Okay, right. And then we credit trading inventory because we don't have the stock anymore. The customer has left. Okay, has left the business with the stock. Okay, so our trading inventory is also going to decrease. Everybody happy with that? Double entry there? Okay, so always remember to show your workings. We're going to do in the next few examples. This was just another method that they could ask you, but we're also going to look at markup on cost and markup on selling or gross margin. Okay, you have to be able to also calculate cost of sales using those two methods, specifically from question 2.12. I'm sure you were then introduced to those markup percentages, okay, on cost, on selling. Right. Then our last transaction is bank charges of 250 appeared on the bank statement. Okay, so we know that, again, you must read with understanding. We know that the business has a bank account, could either be with ABSA, Standard Bank, Capitec, FNB, whichever institution they have chosen. And what does ABSA and these financial institutions do? Every month they will send a bank statement to the owner, but we also know that whatever services they provide to the business is not for free. Okay, so there are charges, and this charges is seen as an expense to um, the business. Okay, so bank charges is an expense, and we know what expenses does. Okay, so this is the one account, and the minute you see the word bank statement, you know that it's money going out of the bank account of the business. Okay, right. So we're going to debit bank charges, which is an expense, and we're going to credit the bank. Okay, so that is our two accounts, bank charges, bank, and we know expenses decreases owner's equity. That is why it's a debit, and that is why it's a minus. Okay, and the value of our assets is decreasing, and we know the rule. Okay, when assets decrease, it's credited and it's a minus. So let's go back here again. Okay, when assets decrease, we credit them. And what does expenses do to owner's equity? They decrease owner's equity, and therefore we debit them. Okay, so there's your debit and your credit, and they are both minuses. Okay, everybody happy with that transaction over there? So again, as you know, similar to the wages, the first example I showed you, we know that expenses decreases owners' equity, and the money is going out of the bank account of the business. Okay. Before we proceed, any questions on your side? Perfect. Right. Now, again, please revise these questions in your textbook. Very important to revise these questions in your textbook. Please remember that this session will continue till 1:30. And I think your lecturers are aware, so you don't need to rush off to class. I'm sure they will understand if you are going to be 30 minutes late. Okay. Okay, so please do revise these other questions in your textbook. Okay, right. Okay, my apologies there. I think someone took control of my slides. I'm so sorry. Okay, Katleho, not a problem. You can always listen to the recording then if you have to attend that lecture for now. It's fine, thank you. Right, so we'll continue. Okay, again, I'm just reminding you to study this. Cost price plus profit markup equals selling price minus cost price equals gross profit, and selling price minus profit equals cost price. Okay, everybody, you need to remember this. Okay, right, to get to sometimes they want you to calculate cost price. Sometimes they give you the selling price and you need to calculate the cost price, or they give you the cost price and they want you to calculate the selling price, or they give you the profit and they want you to calculate either the selling or the costs. Then you must just remember this formula, okay? That if you take your cost plus your profit, it gives you selling. If you take your selling minus the cost, you get your gross. And if you take selling minus profit, you get to your cost. Okay. And then again, this is very important, especially for questions 2.11 and 2.12. When you are asked to calculate cost of sales on the markup percentage on cost, then always remember the rule that the cost price equals 100, right? You're then going to add your markup and that will equal your selling price. And then the next rule is to say taking the selling price and multiplying it by what you want divided by what you have. And I'm sure this has also been um, discussed or mentioned in class with your lecturers. Okay, what you want divided by what you have. Okay, and if they ask you to use the gross margin percentage, which is also known as markup on selling, then the rule is now that selling price equals 100. Okay, now we're working from the bottom up. Okay, here we were working from the top down, so we added, and now it's bottom up. So now we subtract. Okay, so now it's selling price minus the profit markup, and that will equal your cost price. Please, please remember this. Okay, and then again, you take your selling price, if that is given to you, multiply by what you want divided by what you have. And there again, I've also shown you the different examples. Okay, can you all see that? There's an example for each one of them. Okay. So it's what you want divided by what you have and whatever is given for you. If it's the selling price, you'll use the selling price. If it's the cost price, you'll put in the cost price amount. If it's the profit amount, you'll put in the profit amount. And then you're going to say times what you want divided by what you have. Okay, so this amount will, all depending on what calculation they want you to perform, that is how you will use this, what you want divided by what you have. Okay. And then in question 2.10, you will also introduce to the markup percentages. Here is the definitions. Markup percentage is only the profit expressed as a percentage of the cost price. Okay, so we're taking the profit amount. Okay, so again, you have your selling price minus your profit and equal to your minus your cost price equal to your profit. And then we're saying profit divided by cost. Okay, and that will give you your markup percentage. And for gross margin is profit expressed as a percentage of the selling price. Selling price. Okay, so what are we going to do? It's going to take the profit and divide it by selling. And always remember your answer must be in a percentage. You have to show it as a percentage and not forgetting to times it by 100. Okay, any questions there? Are you still all able to hear me clearly and see the slides that I'm sharing? Perfect, perfect. Thank you. Okay, again, here we're going to practice now. Okay, it seems like um, we're going to be wrapping it up hopefully before 1:30. I was a bit worried over there. But yeah, here's another example for you, okay, of how they could ask you to do these type of calculations. Okay, again, going back to this slide, okay, how do I get to the missing answer? Right. If I must calculate selling price, it's cost price plus profit. Okay. If I must get to the gross profit, it's selling price minus cost price. And if I must get to the cost price, it's selling price minus profit. Okay. And we saw that even on the transaction that we did for the accounting equation. Can you remember here? What did I do? To get to the cost price, I took the selling price minus the profit that was given to me. Okay, so can you see how you can use this? You have to try and remember this. Okay, right. And then, of course, what we're going to be using now is also what you want divided by what you have. Okay, we're going to be using this now. What you want divided by what you have. Okay, so if we look, it's 20% markup on cost. Again, what did I tell you? What is the rule? If it's markup on cost, then cost price will equal 100, right? And then we'll add the profit markup. We'll add it, and then that will give us the selling price. Okay. Right. So this is the amount that was given, the 500. We needed to calculate the profit. So again, don't forget to show your workings. So it's 500 multiplied by the 20%, and that will then give you the 100. Please do it on your calculators. See if you are happy with my answers. Right. Okay. So then what are we going to do next? We're going to say the cost price plus the profit equal your selling price. Okay. Right. So there we have that. Everybody happy with the markup on cost? Now let's look at another example of markup on selling, also known as the gross margin percentage. And the rule here is now that selling price equals 100. Okay, can you see it's the opposites? Okay, when it's markup on cost, cost price is 100. When it's markup on selling, selling price is 100. Okay, so now again, They've told us that the profit is 40%. So we working backwards to get to the missing amount here. So we're going to minus now selling price minus profit equals cost. Okay, right. And now in this activity, this was the answer that was given to us. Okay, we were given the profit, so we could either go this way. You've got either you can calculate this one first or this one. And then the rule is what you want divided by what you have. Okay, so if I wanted to first calculate my um, okay, so see here, what did I do? I first wanted to calculate my selling price. So I took the profit multiplied by what you want. You want the 100 divided by what you have, and you have the 40. And that gave me 750. Can you all see that? Please try it on your calculator. See if you are able to do that calculation. Everybody happy with that? Could you get to that answer? Well done, well done. Okay, then we also have here, okay, where you could then also use, now once you have this answer, you can then get to the other missing answer over here by just subtracting the selling price from the cost price. Okay, so this is just another way in which these markup and cost price can be asked in your test or exams. So just always remember what you want divided by what you have. Okay. Right, and you'll see there I've tried to show you both methods of the markup on cost and the markup on selling method that you could use here. Okay. And more importantly, in Learning Unit 2, we use these markup calculations to calculate. I'm going to go back again to the previous slide. Of course, here, you know, it's for the markup percentages and the gross margin percentages. Okay. But we use this more specifically when we need to calculate cost of sales. Okay, this is when the markup percentages are important for us and to be able to understand and complete when we are going to be given this in our test. Okay, so do you think you'll be able to calculate cost of sales using this formula, everyone? Because I know many students do find it difficult to understand this. Okay, right. So before we end off, maybe we can just, is there anything specifically you want me again to just recap? Okay, so you need to know this. Okay, I'll just go back here again. Right. You need to, I'll just go back to the this, of course. Yes, you have to remember this, right? It's in your summary sheet. So please study this, especially for your accounting equation and your steps when analyzing transactions on your accounting equation. That is very, very important. Okay.
Ma'am, where
Yes.
is the summary?
The summary sheet, I'm sure your lecturer would have uploaded it for you on ARC. Do you have access to ARC?
Oh,
It looks like this. From which
yes,
campus?
I saw
From which campus are you? Have yes. Okay.
Victoria.
Perfect. Okay. Right. So your lecturer would have given you access to this. It's for learning unit 1 to 6. Just key very important little notes or cheat. We see it as a little cheat sheet or summary sheet. It's just something that if you want to quickly go and just have a look, if you're not sure about something, it's there. Okay. All the important things is here. Right. And don't forget also, if you're still not sure about um, double entries, accounting equation, please also Fin. I hope you have this QR code that you've scanned it. Okay, Finn is there also to help you answer all your different accounting questions. For now, it's only for learning unit 1 and 2 that you maybe need assistance, right? So please, please do make use of Finn also. Okay, right. And then before I end off with the last is that not to forget that, remember I mentioned about the periodic and the perpetual inventory systems. Okay, you need to still also have a look at question. I think that is the last question in your textbook, question 2.13, where we do we show you how different transactions are analyzed if a business uses the periodic inventory system, and also again not forgetting to study the theory on page 69 also with regard to what is the difference between perpetual and periodic, again just for short questions. Okay, anything else that you'd maybe like me to, any other questions please? Welcome Sithandiwe, welcome. Thank Anything else that you'd want me to, I'm still have some time here. Anything on the accounting equation that maybe you want me to go over again? One of the transactions over there? You all good. So are we expecting good results from you? You're going to
Yeah.
make your lecturers proud, everyone? Good. I'm very happy for that.
Thank you, Ben.
Thank you. Thank you, everyone. If you still want to if you still have a class to attend, I do understand if you want to log off now and report to your class on campus. If you are on campus, then
Bye,
yes,
man.
please do. Bye, bye, everyone. And thank you for attending and good luck for your test on Monday. Okay, all the best
Bye.
and
Bye bye.
bye, 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 everyone. Bye. Hi, Farhana. Oopsie. Farhana, I'm so happy you attended. Any other questions? I seems like I still have a few here online. Anything you want me to just maybe revise again?